2 more weeks of uncertainty. Admittedly, we go back a month, early November. We thought we had 3 weeks of volatility and then conditions would level off and we'd have a peaceful end of the year. Here we are a month later. Volatility and uncertainty is actually higher. 2 areas of uncertainty, obviously Omicron and then the coming Fed meeting on the 15th of December, giving us a perfect break for South Africans as we go into our end of the year holiday that typically starts on the 16th. But before we get into the 2 events, some relatively good news to pay attention to. First of all, the global economy seems to be picking up speed once again. If we look at the global PMI, the Purchasing Managers Indices, you can see a continued acceleration into November. What this is showing, business sentiment is improving, and it's widespread, this improvement, across manufacturing and services and across all 3 major zones, so the US, the Eurozone, and in China. We also have some reasonably good news in terms of the supply chain shortages. So one that's particularly important for our South African clients is it appears that shipping rates are easing off once again. Admittedly, they're still high on a long-term basis, but over the past week started to come down slightly once again. The third positive is the sharp reduction in the oil price. Now that is linked to the major negative, the Omicron variant, but oil has remained low. OPEC has continued with its planned production increase. So some relief for South African motorists and more so for South African corporates who are big fuel users, so the retailers, logistic companies, miners, good opportunity really for them to come into the market to hedge their fuel price needs. As I say, 2 areas of large uncertainty. First of all, Omicron. Now, what do we know at this stage? Well, we can, with a high degree of confidence, say that it is highly transmittable. So we know that from the extraordinary growth in South African case numbers, just within 2 weeks going from 250 cases per day up to 15, 16,000, just an extraordinary rate of growth. Secondly, we know people are being reinfected. So if you had the earlier variants, it doesn't give you full protection, certainly against Omicron. Thirdly, the anecdotal evidence continues to suggest that at least the vaccinated have good defenses. So while they may get Omicron, they don't get particularly ill. Unfortunately, no firm evidence yet from the unvaccinated. That's very important for us in South Africa, where our vaccination rate is 37%. Obviously, in the developed world with higher vaccination rates, as long as the vaccinated have high protection against getting severe COVID, then Omicron will not be such a threat. So what are we looking at now? Well, first of all, the continued growth in SA case numbers. That's looking very dire. It is probable that by the end of the week, we're going to be seeing record new case numbers, possibly even 30,000 cases per day. So just that extraordinary growth rate, hopefully slowing down, but still case numbers continuing to escalate. We then need evidence on the severity of the disease. So I have been looking at hospitalization rates. I'm becoming a little bit skeptical on that. From what I've heard, a lot of people are going to hospital with COVID rather than because of COVID. So the hospitalization rate, the figures there are slightly distorted. Doesn't mean someone who's going to hospital and has COVID is necessarily a severe case. You could be going to hospital for some other reason, do your PCR test, and it comes through as positive. In this week, maybe next week, we should get some results from the lab tests from the vaccine makers, so that the test tube results about the efficiency of the vaccines. Hopefully, it is still relatively effective in combating the virus. The other big issue is the looming Fed meeting. Major news on that front last week with the Fed chair, Powell, speaking in front of Congress, changing his words substantially. He now thinks that transitory is no longer an appropriate word to define inflation. He rather wants to be more subtle in the choice of his words. But that is a major change, signaling that perhaps he thinks that inflation is going to remain high for longer. Secondly, perhaps more importantly, he supports, or sounded as if he supported an acceleration in the Fed's taper program at the December meeting. So it seems pretty much a given. Come 15th of December, the Fed is going to increase the pace of the taper, so slow down QE at a faster rate. Now, we did have some mixed data on Friday, non-farm payrolls, relatively weak, but the unemployment rate continued to fall. Probably nothing there that's going to change the Fed's mind. But what could change the Fed's mind is the upcoming CPI data. We get that out this coming Friday, and a figure of huge importance for financial markets. 2 weeks then of uncertainty, waiting for the Fed, waiting for more data and evidence of the Omicron severity. Financial markets are pricing in a lot of fear. So we look at the MOVE index, the expected volatility in US Treasuries, elevated levels. At the VIX index, that's expected volatility on US equities, elevated levels. So substantial stress evident there. We have seen stress in the Rand. Dollar Rand has pushed above 16 once again. Certainly Omicron is very worrying. Admittedly, we haven't sustained above 16 for any length of time, but that pressure just keeps building on the Rand to weaken. Exporters can't keep coming in and flooding the market every time. Eventually, they are going to give away. A little bit of better news on the swaps front. The worse the fourth wave in South Africa, the less likely the SARB is to hike rates. We have seen some easing in our swap rates back to multi-week lows. Fortunately, still at relatively elevated levels. So a better opportunity for our corporates who are looking to hedge interest rates to enter the market, but certainly not a great pricing. It is still expensive out there to use the swaps. Our clients continue to look at other alternatives. In terms of the week ahead, big focus obviously on South African COVID numbers. US CPI out on Friday, as I mentioned. 2 South African figures to look out for. We have our GDP for the third quarter. That is likely to show a contraction because of the third waves, because of the riots, the port problems. Also looking at our current account figure, our expectation and the market's expectation is for the current account surplus to ease, but still remain at relatively good levels. Good summary that for the Rand environment, effectively commodity prices have come off, so our trade and current account surpluses have eased, but certainly a movement in the wrong direction, hence moving from a very positive Rand environment to a more neutral, possibly less positive Rand environment. So 2 weeks of uncertainty, focused on COVID, focused on the Fed. The Fed is very much going to be driven by the CPI figure out on Friday. Good luck for the week ahead.